Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us to talk all things markets is University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, as we get into the shortened holiday week, we're talking a little bit early today, so markets haven't closed through the midday and through the afternoon. So let's talk about what we've seen so far through Friday.
Yeah, if we start on the cash-fed cattle side, down $1.75 this week on some pretty light test. Feeder cattle markets are $2 to $4 higher early this week. On the futures side, the August live cattle futures contract was up about $1.75, and the August feeder cattle futures contract was up about $1.80. Choice box beef price up 25 cents this week as declines in brisket prices offset some strength that we saw in ribs and loins this week. On the hog side, cash hog prices were down about 70 cents this week, while that August lean hog futures contract closed up a quarter. The pork cutout value fell again this week, down $2.30, as we saw weakness across the board, but ribs and bellies really stuck out. Now talking about belly prices below $1 a pound again with this latest decline.
All right, not too much for us to get into this week, but to kick things off, let's talk a little jobs report and another big month when it comes to jobs here in the U.S.
Yeah, in fact, we got a better jobs report number out than folks expected. The expectations were for growth of about 165,000 jobs in June, when in fact the report today gave us 224,000 more jobs. So good news in terms of additional jobs. The unemployment rate did edge up to 3.7% with that report. In terms of more money in the pockets, which I think we often like to talk about from a meat demand standpoint, over the last year we have seen the average hourly earnings increase by about 3.1%.
As we take a look at those numbers, we talk a lot about demand, and we're going to focus on that a little bit today, just specifically with these two reports that came out. On the domestic side of things, we see that hourly earnings number move up. How big of and how much of a role does that play in keeping our domestic demand supported and helping as we see these big and continued large cattle and pork production numbers?
So I think it's been very important, the strength in the domestic economy that we've seen so far this year. And I start that way because when you think about the choice box beef price that we see today, it's still $10 or so above where we were a year ago at this time. If we hadn't seen those stronger job numbers, increases in average hourly earnings, then I think we would see a situation where there'd be less buy-up. And I say less buy-up, so lower income consumers purchasing higher quality or more expensive beef that otherwise they might not. And I think if we would see the economy really start to slow, that same phenomenon will occur on the other side of those lower income folks are the ones that are going to buy down the quickest. When you see what's been happening on the export side, we need strong domestic growth. So I think those job numbers have been much more helpful, even though we're talking about, maybe prices where they're not as good as producers might like to see them. I think had we not had the strong economic growth going on in this country, we wouldn't be at the kinds of prices we see today for beef and pork particularly.
Let's talk about the flip side of that. Monthly trade data for May came out, and exports in a couple of places look like they're struggling a little bit.
Yeah, so we continue to kind of talk about the same story as we get the May data. So we're now in 4 or 5 months for many of these where we're running below year-ago levels. We start on the beef side. May beef exports were down 0.1% relative to a year ago. I think when you look at the individual countries, Japan down nearly 5% in May relative to a year ago, has a little bit to do with that overall decline in beef exports. If we move to the pork side of the equation, pork exports in May were down 0.8% relative to a year ago. You don't have to look much further than to the south. where Mexican pork exports, or sorry, U.S. exports to Mexico down about 33%. We did see positives on the chicken side. Chicken exports were up 13%. Mexico is important to that growth in U.S. Chicken exports. When you start to look overall, all right, so beef and pork net exports. So take exports, subtract what happened on the import side. For May, beef and pork net exports were down 1.5% in total, but year to date, beef and pork net exports down 7.6%. So we're just pushing more product towards domestic consumers in a year where we're going to see probably 4% increase in pork production and 1 to 2% increase in beef production.
When we get down to it, Japan and Mexico obviously jump out at us. We know that they're supposedly working on an agreement with Japan. We know USMCA still is not fully across the finish line. And then there's the ever elusive China. As we get in and take a step back and take a look at all three of those reports or those agreements, how important is it for us to, and I feel like we talk about this all the time, but to get those three agreements across the finish line and get us moving product where it needs to be going?
Yeah, so let's take the big picture here for a minute. I keep reminding everyone that the growth in consumption of U.S. meat produced is likely going to occur outside the United States going forward. The domestic consumers are important to this picture. I don't want to downplay that, but the growth going forward likely comes from the international side. Now, let's take them one at a time. Japan's important for both beef and pork. On the pork side, getting a change in terms of that gate price mechanism, I think gets us more pork to Japan long term. Reducing tariffs on U.S. beef going to Japan is important, especially when some of our potential competitors, we can look at Australia, have lower tariffs on their beef going to Japan today than we do, and that's only going to continue to widen absent a new agreement with Japan. Mexico, getting a USMCA to the finish line is important. Hopefully with those tariffs now off the table here for a while, we'll get some growth occurring, but those markets don't come back right away. Sometimes that displacement as other countries fill some of the holes that we left takes time to get back. And I think we're seeing that continue to play out from what's happening to pork going to Mexico. And of course, China's just the wild card. If the Chinese decide they want significant amounts of U.S. pork and beef, it could be big movers to the prices that we see in this country. I think we've seen the on again, off again from both just overall trade policy going on there and tariffs and such, to the disease events of ASF, all making us 1 week be extremely positive and the next week being extremely negative. How that all plays out at the end of the day, there's still a lot of uncertainty, but just recognize with the population level in China and the interest, I think, in beef and pork consumption, it could be a big market win for us longer term.
All right, Scott, that'll do it for us on this shortened holiday week. As we look ahead to next week, what reports are we watching for?
Yeah, so USDA is going to give us their next WASDE report coming up next week. It'll be interesting to see what happens, maybe more from a crops perspective in terms of acreage and yield estimates for corn and soybeans. And then we'll also get retail prices out next Thursday.
All right, Scott, have a great weekend. We'll talk to you next Friday.
Sounds good, Megan.
To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.